us to learn, to have financial literacy, to understand how to put our money to work for us. And the way I look at it is that sometimes I believe that you might not be smart enough to start a company. You might not be brilliant enough to start a company like Elon Musk, Bill Gates, Warren Buffett. But if you miss on starting the company, don't miss out on the returns that the company will produce. So you can choose to be a fellow investor. You invest along the entrepreneurs, and you benefit as these businesses are growing. And sorry, is there someone who has got something to say? Okay. I believe there's no one. So the main reason is for us to look for businesses or to look for entrepreneurs that we want to invest along with in their businesses. And we'll in this class we'll just learn a little bit about how to go about that. The first thing is that these classes are going to cover the basics of equities, right? So we'll cover different kind of equities, right? There's distressed equities, growth equities, value equities. So at the end, you'll be able to know what kind of risks you are taking when you invest in certain types of companies. Like, let's just say recently listed, very poor history. Management, it's first time when they're running the business. Or when you're investing in businesses that have run for 30, 40 years, they've got a long track record of being able to produce good returns. Or maybe you're looking at turnaround, right? You're looking at a business that was horribly run by a CEO previous time, but now it seems as if there's a new management in town and they're turning things around. And sometimes you're looking maybe at growth businesses that just have a long-term growth prospect, and maybe the whole world is moving towards, they are leveraging the world towards that long-term growth. So we'll look at those things. We'll learn how to value businesses, and one thing that I should just indicate now is that valuation is an art, right? So there's too many ways of valuing businesses, and it even depends on what kind of businesses. So we'll go through that. We'll learn how to value businesses. Thirdly, we'll learn how to see what is already in the price of the business, right? So if you're looking at Facebook today at let's just say $800 billion US, right? How do you know if the market is really priced in everything that Facebook could produce? Remember, the value of a business today it's all the cash flows that it can produce in its lifetime. So how do you know if the market is mistaken, or you are the one who's overlooking something? And I think lastly, we'll understand the risks that are involved in equities. So equities are very interesting in the sense that both skilled and unskilled people can make money. So if all of us today we open an easy equities account and we say all of us let's go choose a company, you can find that the most skilled person can lose money, and the person who doesn't know anything can still make money, maybe at the end of the week when we review the accounts. But before we go to that, I would just like to, okay, Simpiwe, do you want to say something?
No, I don't.
Okay. I would just like to encourage all of you guys to have at least a demo account. My preference will be that you open an easy equities account or an equities account with any broker. You can choose the bank, Standard Bank, FNB, all the big banks have got their brokerage accounts, and put a little bit of money there. You can put 500, you can put 1,000, so that you can learn to invest. And for those of you who've been investing for some time, I think it would be great for you guys to engage and contribute towards this class as well. So I'll just like to first, as I said, these classes will be engaging, so we will be trying to discuss and engage. And I would just like to hear from you guys. Is there someone who's been investing for 3 years here? And if you are here, you've been investing in equities for maybe at 3 years, at least 3 years. Can you please unmute yourself and just tell us about your experience? How has it been? Has it been easy? What are the fatal mistakes that you've made, and what are the lessons that, or some things that you think we should, for people who've been investing for 3 years, what are the things that you think we should maybe focus on in these classes to make sure that we accommodate everyone? So these are mistakes that you think we should kind of watch out for and help others ignore. Mistakes that you can consider that they were costly, and just an advice to those of you who are going to be opening accounts, a friend of mine who taught me to invest, it's about 7 years ago. So he told me that, Renan, each time when you lose money in shares, just write down the amount of money that you lost down, and that's your school fees. So you are paying to learn, and that lesson, you should write it down as well. And it's your school fees. Just make sure that your education is not too expensive, so don't make the same mistakes time and again, due to, and investing involves a lot of money, a lot of emotions, because it's the only place where you see your bank balance fluctuating instantly, like in real time. But is there anyone who's been investing for 3 years here in equities, in shares, who would like to share their experience and what we should include in these classes? Anyone, guys? Okay, the silence means there is no one. So you guys, all of you have been investing for 3 years or less. Okay, that's interesting. That's interesting. Now, I would just like us to just have one engagement. So most people whom I talk to about investing, they think I think I'll just rush to the important stuff, guys. So here I just want to highlight, maybe for let's just use this as a case study, to say how to think about investment. There's a company listed in the JSE right now called Renergen, right? So you guys can check it out. This company reported results last week. It's got revenues of 2 million, right? 2 million rands. And the market has valued this company at about 3 billion rands, right? Revenues are 2 million, and the valuation is 3 billion. I would just like to hear from you guys, and this is where investing gets very interesting, in equities more especially. I would just like to get a few of you guys to unmute and tell me, do you think the company is overvalued? What makes you think it's overvalued? And I know that you guys don't know the company, but just highlighting that here's a company that's trading at about 10,000 times its revenues, right? I think if my math is correct, from 2 million to about 2 billion, you multiply by 10, you go to 20 million, 200 million, then you go to 2 billion. What do you guys think? This company is listed in the JSE, and you guys want to be investors in equities, you want to make a lot of money. So you should be able to locate value, right? You should be able to understand what something is worth, even if it's not accurately. So valuation is really not, it's not like you can specifically say this is the true intrinsic value of a business. It's something like a range. Can I get someone to unmute and just give us their thoughts? I want this session to be engaging. Guys, can you please engage? Is there anyone who would like to Michael? You've been investing for some time. You actually taught shares, so maybe you and I can start engaging to just start the conversation rolling. And I think some other guys will also engage as well. What do you think, leadership? Here's a company trading for 2 billion and it's got 2 million revenues. Any thoughts, guys?
I think that is ridiculously expensive. That is, you're saying it's more than the revenues, not profits.
So this company is generating 2 million. So you you can actually just check it out, right? It's generating 2 million in revenues. Those are the revenues, but the market thinks right now, the market agrees that this company is worth somewhere around 3 billion rands, 3 billion rands. What do you think, Mugabe? So it's trading at about 10,000 times its revenues.
I think the market is pricing the company way too high. That's what I think. To me, according to me, it seems to be overvalued. Because this is before earnings. This is before any profits. So this is several multiples of the earnings. So it's a lot. It's overvalued.
Okay. I'm just going to ask a few more people to give their thoughts. So you said it several times, the earnings. So this company is not making money as yet, right? So it's not even generating, still money losing. And the revenues are just very small, right? 2 million only. So can we get someone else? So I want to develop this story to be interesting. So you'll get a picture on what goes into investing. So this will help a lot of us to understand what goes into investing. I'm just going to add something, but before I add something about the company, I want to get few views from some of you guys.
Yeah. Well, okay. Just I want to add something.
Okay. Yes.
Like, is there any future contracts or any contracts that are going to generate more cash for the company in the future? Maybe they have a certain contract that will say guarantee revenue for the next 10 or 20 years, and probably it's going to grow. So maybe those are the aspects that I would look at after seeing the price that is there. Maybe maybe the market is pricing into the future contracts or the contracts that are in place that are going to generate more revenue in the future.
Okay, that's interesting. So you touched on a different section that we're actually going to touch in. Right? It's a question of saying if the value of any business today, right? So I would like, when you see a business that's listed, I would just want you guys to think that whatever the market is valuing that business today is the total value of the future cash flows discounted to the present value. So for some of you guys who don't understand those terms, don't worry, you'll get to understand them. But if we say this business is worth 3 billion today, so the market believes that the cash flows that this business will generate in the future, if you discount them today, they are worth 3 billion. That's why the market is willing to pay that 3 billion today. Obviously, you have to take into account some risks there and whether the business will be able to produce. Is there anyone who wants to talk about this company? 2 million in revenues and 3 billion in valuation. Investors think this business is worth 3 billion. I think at 25 past I'll add something. Is there someone who wants to add? Simpiwe, what do you think? Michael, what do you think? This company is trading at 10,000 times its revenues that it released last week. Anyone? Hello, guys. Let's engage. Let's engage, guys. Tumelo, what do you think? Okay, let me add now new information, right? So this is how you should go about thinking about businesses, and we're still gonna cover, as I said, this is an introductory class, and the name of the company is Renergen. So you guys should actually check this company out, right? So what I want to add is that this business is a renewable resource business, right? So it's a natural gas mining company, right? It possesses the only petroleum rights in SA onshore, so for mining onshore. And they estimate that the total natural gas in their field is worth about 10 billion rands. So now I just started including something which was not there before. is that this business possesses assets. You can assume that the natural gas that's underground, it's the assets of the company. They're worth about 10 billion rands. So Mkobe said, okay, he thinks this company is ridiculously valued because it was trading at about 10,000 times its revenues. But now we see that it's trading at about 30% of its assets, right? It's got assets, which is natural gas. We know that the world wants to go green in energy, clean energy. So in South Africa, we're going for natural gas, right? And this company possesses mining rights for a petroleum field, which is worth 10 billion. Now, I need someone to comment. Do you now think this business is overvalued or is undervalued? And what makes you think, support your answer, what makes you think it's overvalued? What makes you think it's undervalued? Revenues are still 2 million, but there's a field of natural gas which is worth about 10 billion. Is this business undervalued or overvalued? What do you guys think? Let's engage, guys. I want us to be engaging, and it's okay to disagree, by the way. It's okay to say, Randani, I think I disagree with you based on this and this and this. And that's what we want. Or Mukebe, you can give it another shot again. Now you know that this business has got assets worth 10 billion. Do you now think it's undervalued or it's overvalued? At first, you only had incomplete information. You were looking at revenues. There were no earnings. It's money losing. Now that it's got assets worth 10 billion, do you think it's undervalued or it's overvalued? What do you think?
Well, I'm more interested in assets that make money. So right now we're sitting at the potential of making money, and those assets are only making 2 million out of 10 billion. So that's very, very small compared to the assets that are there. So it still seems to be overvalued to me. They just have a lot of assets that are not doing anything. So I want to know what the other assets are doing.
Okay, so Mkabe, you're saying you are not impressed with the 10 billion field of natural gas. Is there anyone who's impressed amongst you guys? Michael, are you impressed? There's a 10 billion worth of natural gas here. Would you take it for 3 billion? You pay 3 billion to get that 10 billion worth of natural gas. Simpiwe, what do you think? Hello, guys. Let's engage. Let's engage, guys. It's okay to give an opinion that you think it's incorrect. In fact, the story of this company is still developing, and we're just introducing what we will cover in our classes. And by going through this example, we're learning what's important, more especially from your answers. We're learning what's important. I saw Michael, you had unmuted. I was still talking there.
Anita, can you hear me?
You can add. Yes, I can hear you.
Yeah, I'm doing double barrel. So you're saying the company is valued at 10 billion, right?
3 billion.
The company is valued at 3 billion, but its assets are worth around 10.
Yes, natural gas that belongs to the company, it's worth about 10 billion, but its revenues is only 2 million.
So I would look at it in this way, looking at the revenue versus the assets of the company, right, and its listing price. So if we're saying that this company is listed for 3 billion, of which total the assets are worth around 10 billion, then I would say from my own perspective of investing, I would still buy into the company based on the value of their assets. Because in this case, we are talking about natural gas and so forth, of which over time, I think it will have more value than it has currently. So I would say in that regards, the company then is undervalued. That means the market is saying this company is cheaper than it's supposed to be. I don't know if I'm really making sense.
You are. To me, you are making a lot of sense. So you think the company is undervalued because the market is not appreciating the natural gas that it has.
Yes. It's more like me going to ShopRite. Then they say there's a sale, something that is worth 20 rand is being sold for 15 rand. I think in that regards, it's cheaper to buy that particular item, just like this particular company.
Okay.
Yes.
Okay, interesting. So Mukabe and Michael, they are now on opposite sides. Mukabe looked at the revenues only, but he had incomplete. Okay, Mukabe, it seems as if you're changing your mind, Mukabe. Are you?
I'm not really changing my mind. A lot has not been revealed as yet, like their debt levels and stuff. So, what leadership Michael is saying is deciding based on information that is not yet revealed, all of it, because it's not really like going to ShopRite and saying this is worth this much, because we haven't really looked at the cost of production or the cost, the debt that is involved in the company. So I'm still saying that it seems to be overvalued, and I would like to know maybe the prospect of the gas, this industry. I think it's an energy industry, so maybe you might want to give us a background so that we know what we're dealing with.
Okay, interesting. And in asking these questions and pointing these two people, guys, what I wanted to highlight is and we're not done with this example, is that Michael is willing to go look into the future, right? He says, here I am, I've got 10 billion worth of assets. The market thinks these assets are worth 3 billion. I'm willing to pay the 3 billion, then I take the 10 billion of assets, and in the future, I know that I'll generate somewhat towards the 10 billion. So this business virtually has got revenues of 10 billion that are just sitting there in its lifetime. That's the value of the natural gas, right? So Mkobe, you were looking at current revenues, which is only 2 million, but there's more revenues that are yet not coming out. They're yet to come out, right? They're yet to come out, these revenues. It's what the natural gas facilities are worth. Now, Mkobe, you're not willing to go into the future and look what the company will produce. You're saying, okay, right now it's not producing enough revenues, and I'm not willing to pay for the assets that are not producing anything. Is there anyone who has got a different view of you guys? Before I just add the third item. So the first one was revenue. The second one is asset, which is the natural gas facilities. And before we go to the third one, is there someone who wants to say something about the company?
My leader, again, I just want to add something on my view before you add something. So in this case, we are looking at the value of the company versus its revenue. We haven't touched based on liabilities. So my decision at the moment is still based on the value of the company and the price at which the company is being sold. So at the moment, I can see that, okay, this company is listed way cheap than its actual value, its assets. So I'd make a decision to say, oh, I would be more interested in looking at this company because I see that the price at which it is selling versus its actual value, there's something that, at least I think for now, there's something that I can make from that particular company without looking at the liabilities and the other prospects of the company. Yeah.
Okay, thank you. And for those of you guys who just started learning to invest recently, I hope you're following the logic here. When you want to invest in a company, when you're still studying it, right, you still want to understand. Obviously, there's an easy way of going about it, right? You just close your eyes, you choose a company in the JSE, you invest in it. You can either make money or lose money. The worst you can do is lose what you invested, but you can make much more than you invested. So that's the beauty of equities. But but if you choose not to do what I'll call speculation, although it might not be speculation, investing without doing research, without understanding something that the success cannot be repeated, because anyway, in the first time you were not informed, you were maybe lucky. Now we're trying to make informed decisions. We want to make long-term investments that even if COVID comes again, you will be able to hold onto your investments. That means you understand, you've done proper research, you understand the investment, the business that you invested in, and probably maybe you'll be willing to own, as Michael used the analogy of assuming you're buying a grocery, when you find things cheap at a discount, you want to load up if you've got the cash. Now, what I want you guys to understand, and we're going to go through this, we're going to study financial statements, right? You guys, I think Jed or one of the teachers will take you through financial statements, and they'll probably start with the income statement. So the income statement is just going to reflect the money that the business is making, right? The cost structure, right? Where costs lie in this business. And Michael and Mukobe recently, when they were adding to their initial remarks on the company, they are now starting to focus on the liabilities. They're concerned about what if this company is got this 10 billion, is generating 2 million in revenues, but it's losing 500 million per year. That means these gas resources will be depleted soon, although they are not mined as yet. It means this company is accumulating so much liability so quickly that it might not be worth even considering it, right? So you have to consider the cash burn. So Jet will teach you probably the cash flow statement. And I think you're starting to understand why I said valuation is an art, right? That a value of a company is a range, really. Why? Because if you just want to look at revenues, right? Thinking of a business that's trading at 10,000 times, it means it will take 10,000 years for you to get back your money if the revenues were not growing. Now, you're not going to live that long, so that investment is not worth it. But if you look at assets, now you realize, okay, the assets are worth much more. They are worth much more than what the market is looking at right now, or what the market is willing to pay right now. Then maybe the company is undervalued. Maybe it's not as overvalued. But the third element that comes in, it's what Michael and Mukobe tried to touch on, and I think the class will be finishing soon, Mukobe touched on the cost of extracting the gas, right? The gas is underground, it's natural gas, and the gas can migrate underground, it can move to a different field. So let's just say you've got mining rights to mine Braamfontein. Let's just say the gas is located in Braamfontein. Then, it starts migrating to Parktown, wherein you don't have mining rights. So that's the risk that is presented by the business model of the company. There's execution, so there's a lot of risks that can go in before we get the natural gas out, right? In other words, I'm trying to say this company is not worth 2 million. It's not worth what its revenues are worth. It's neither worth 10 billion, what its assets are worth. But for us to understand how much this company is worth, we need to take into consideration a lot of moving parts in the business. Whether the CEO will be able to execute, whether the CEO won't be able to execute. And I think right now, are there any questions, guys? The main reason for this is not for us to research the company, but it's just for us to display what we're going to be learning, what is important in investing. So I think some of you are starting to understand what is important in the process of investing, and the pitfalls that may appear from nowhere. Is there any questions, guys, or any remarks, anything that you'd like to say?
One question here, my lead.
Yes, Michael.
Yes, I think I'm not sure, or maybe I didn't hear correct. I want to ask, did you say the company is the only company that has the rights to mine gas around the country?
Yeah. So this company, I was researching this company. So at work, they gave me this task. Say, okay, Rendani, globally, there's a move towards sustainable energy, right? In South Africa, we've got Eskom that has been failing us for 10 years. And people are starting to look for alternatives in South Africa. So let's look for companies that are listed in the JSE that are positioned to benefit from this structural tailwind. They move towards green energy, abandoning of fossil fuel, coal-produced electricity towards wind, solar, as well as natural gas, right? And I went through this process that I'm taking you guys through right now. But this company in South Africa, there's only one onshore mining rights for petroleum, right? So this company is the only company in South Africa that possesses onshore, meaning they're not mining in the sea, so they're mining on land, right? So they're mining on land. So their operations are actually in Free State. They've got some mining rights in Malanga, but they haven't started mining. And they're still actually just started producing natural gas recently. But yeah, the answer is yes, Michael. So it's the only company in South Africa that possesses natural gas mining rights.
Right. So I think then if we're looking at this kind of company, because another thing that we need to consider is the industry in which the company is operating. So if it's like this, then we need to consider those rights as well when we are looking at the company, say if the industry if things go bad in the industry, can this company sustain itself in terms of moving from one place to the other?
Okay.
Yeah.
Okay, that's interesting. Interesting. Okay. Anyone else? I wish we were able to see some of the financials of this company, but I think it will be premature because today's class is just introductory to the share and investment class. Is there anyone with remarks on this company before I just add the third leg to the company, and we finish off our discussion and our meeting? Is there anyone who would like to say something? Okay, I assume there's no one. Now let me just review to you guys. We've got a company listed in the JSE. It's called Renergen. It's trading for 3 billion rands. It's generating 2 million. I hope you guys are writing down these things. And if you're not, next time when you think of coming to these classes, take with you, just get a notebook as well as a pen so that you can write some of these numbers down and be able to visualize them. This will help you avoid a lot of mistakes, actually, not ignore. Again, let's go back to the company. The company is worth 3 billion. It's generating only 2 million in revenues. And based on that, we think the company is extremely overvalued. On the revenue side, it's going to take 10,000 years for you to get your money back. So nobody's going to live that many years. So it's overvalued. On the other hand, it's got assets worth 10 billion. So maybe it's undervalued. But the third leg that I want to add, right? And you guys indicated a lot of things that we'll learn into the future. What if I were to, and this goes into understanding the industry, right? When you're investing in a company, there's too many things that you have to research about. What if I were to add that in this natural gas, right? When you're mining natural gas, there's a small byproduct there in natural gas, which is called helium, right? So helium is the coldest gas on Earth, I think, and it's used in a lot of things. Every electronic thing that you have is got helium, right? Every speakers, cell phones, laptops, electronics, they've got helium. And it's used in rockets, right? So we've got the colonized Mars mission with Elon Musk and SpaceX. So when they have those rockets, they need helium for them to take off. And helium is an immensely rare commodity globally. But for this company, it's in abundance in the natural gas. Would that change how you see this business? Now, this is a new opportunity which is just appearing. If and this is for you to appreciate doing your research, doing your work before you just invest in a company. Someone could have just came into this company, you look at the revenue, you say, no, it's overvalued. Someone can just come and you actually ignore it. Someone can just come, look at the assets, you say it's undervalued, you just buy it. But someone now looks at the revenue, looks at the assets, now looks at the opportunity, right? He looks at the helium that is available here. And in fact, these guys, they developed to show, okay, let's touch in management just due to time. Let me just add another thing, which is management, right? So they've got helium as part of the natural gas. About 4% of the natural gas, there's helium. Helium is a very rare commodity. And the management now, they do, as vaccines were announced in November last year, right? Pfizer announced the vaccine in November. When vaccine was announced, these guys realized that, okay, these vaccines need to be stored at minus 70 degrees. We have got helium, which is the coldest gas on Earth. Why don't we develop a technology to store these vaccines, right? So these guys developed a technology to store vaccines. So vaccines can be stored up to 30 days without electricity at minus 70 degrees, right? So if there's load shedding for 30 days, these guys' technology can work. And they developed a prototype. Now they've gotten their first customer in April. They got the first customer for vaccine distribution. So the guys will be distributing vaccines here in South Africa. And helium is one of the coldest gases, so they can use it even in trucks, trucks that are transporting goods, the cold storage trucks, right? But let's not go into that. That will confuse us. Now you kind of see that there's opportunity here to exploit helium, as well as the management that is very proactive. In 4 months, they've already developed something that is solving a COVID problem. Would that change how you look at the company? And this time around, I think maybe we can excuse Michael and Mukobe. Any of you guys can build on what these guys have already said, right? So if you were sharing the same views as Mukobe that the company is overvalued, would that change your view now knowing that this company's natural gas is not just natural gas? There's helium there, which is very rare, and it's already working to solve the COVID problem, right? The vaccine storage. Would that change your view, and why? Any of you guys who's willing to engage, please unmute yourself and engage. Okay, I'll just read out the names that I can see here. Siyabonga, what do you think? Okay, Mkobe, Michael, it seems as if today the meeting is in between the three of us. So what do you guys think? Would that change your views on the company? Or it's just getting more complicated?
First, can I say this to the new guys?
Yes.
No, participation when it comes to this investing thing is very key, because you get to learn a lot through participation. When we start reflecting, like, my view was like this, then later on you get a different view. So participation is very key, comrades. We need it. So in terms of what you're saying, Renan, I think, yes, in the long run, your view about the company will change, because now you are seeing an opportunity in the market. There's a huge gap for that, of which it favors the company. So I think from my side, yeah, then my view is still sustained.
It's still sustained. You think the company is now even more undervalued, or maybe similarly? You still think, is it more undervalued now, or it's still just undervalued?
I think it's more undervalued now, because the company, from the look of things, it shows that it has great potential. So I think now it becomes more undervalued than it was initially.
Okay, great. Kobe, what do you think? Do you still think it's overvalued? Because you want the cash flows, you want to see the money. You believe that we can't service debt with potential. We can't pay debt with potential. So let's see the money. Let's be okay. Let's know that this company can service its debt. Then we will be willing to pay the future. What do you think, Mkobe? Or any of you guys?
So I think I did request that I would like to hear more about the background of the company. What is this gas that they're mining, and how does it operate? So I think there's more to learn just to find out what is there. And you mentioned a lot of things which made me realize that you can't really say that the company is overvalued or undervalued unless if you take time to actually investigate and find out what is their market and all of that. So in this case, I would like to remain neutral, and then because I still feel like there's a lot of information that I don't have. So yeah, I'm just neutral.
Okay, great. I think you gave the conclusion that I wanted to give. So this example, I gave it to just help us appreciate that investing is both easy and very difficult. And we need to put to place our part in understanding the business, the management, the opportunity, and a whole lot of variables that are in. We have to understand the numbers as well. We can't ignore the numbers focusing on the opportunity, right? We can't ignore the opportunity focusing on the numbers. So we need to blend all these things into our research, right? Learning to understand the business. And that's when we can find opportunities that can compound our money, right? And the importance is not just finding an opportunity, it's also finding an opportunity that you can draw comfort in, right? If someone comes and criticizes this company tomorrow after you researched it, you will not sell because of narratives, right? Or if COVID comes, if panics comes every 3 to 5 years, you'll always get a market crash, 20% kind of looking, and when those opportunities come, you can only take advantage of them if you're prepared. This class, I think, will just end it here if none of you guys have questions. But the main reason for using Renergen is just to make you guys understand what we'll be covering. And I think we've just highlighted on a bigger picture, kind of. We didn't talk specifically of the income statement. We didn't go into detail. There'll be days that you guys will go into detail with the income statement. We didn't go into the balance sheet. Maybe some of you guys don't even understand how to interpret the balance sheet, right? But those are critical things. The opportunity, assessing the opportunity of the business. Okay, I see there's someone actually who's got their hand raised. Yeah, you can talk. You can unmute yourself.
I just want to know, like, I've never invested before. So, like, how do you start? How do you like create whatever you need to create in order to invest, and what platform and etc.
Okay, great. Okay, great. I hope you are on the History Makers WhatsApp group. So this is your question. I'm gonna give you a highlight, but it needs to be a continuous one. And this is where History Makers comes in, assisting you to be more financially literate. So they'll assist you with opening the account. We have got, I think Simple will clarify on the brokers and everything, and some people will share some information on the group there. But basically, for now, what you can do, you can just go on Google, type Easy Equities, right? After you type Easy Equities, that's the broker, that's the cheapest broker in South Africa, right? And you can try to open an account. And after you open an account, they'll want you to submit your FICA documents. So that's proof of address and your ID, right? So they should be able to know who you are and where to find you. And after you open the account, more information, as these classes are rolling on, you'll get to understand, and you have to be part of the group, right? The WhatsApp group. If you've got any question, just post them there. If you're stuck when you're trying to open the account, just text there on the group. Someone from History Makers will assist you with opening the account. I hope that helps, right? So for now, you just go to Google, you type Easy Equities. That's the cheapest broker in South Africa. Open an account, and from there, the investing process will be going through it in the coming weeks. What to invest in. This is what we're trying to cover actually, what you to look at, and some more information, broker specific, how to deposit your money into the broker, how to withdraw. You need to be sure that you can get your profits after, and a lot of things that are related to that. You can either get the information from Equities or History Makers. I'm sure there's someone who will assist you in History Makers. I hope that helps. Is there anyone else with a question or a remark, just on the company on today's class? We still have 4 minutes.
Tawela Randan. I have more of a general question. Which one do you think matters most between the future of a company or the past of a company? Like, I don't know, I just jumped into investing without understanding anything at all. And now I'm stuck with, okay, but it's now doing a little bit better, but I thought I was going to do more than that, better than that. I invested in a company, RHMB, and there was a debundling of a sort, which I still don't understand what that is. So it's more of a general question. What do you think? Do you think, or it's a question that requires a lot of understanding of the concept that maybe we are about to cover?
Okay, thank you for that question. That question reminded me of a mistake that I made in 2015, But before I take you to the mistake, investing has got a lot of moving parts. So for some businesses, the track record is very important. And I, for one, I seek a lot of comfort, right? So I want businesses that have got a history, right? Businesses that I can see that there's been execution. I want to be convinced about the business model, the solidity of the business model. I want to be convinced about the management, that they are rational, they will make good decisions. I want to be convinced about capital allocation. In the past, these guys, they've paid dividends without borrowing money to do so. So I want to be convinced about a lot of things, right? But I can't ignore the opportunity, right? So there are businesses that are just story-based businesses that right now, Renergen, as an example, it's a story business. Right now, it doesn't have anything. It's not producing anything, but it's got a lot of potential. So you can't ignore the future when you're building the business. So my answer to you is that both of them are very important, more especially to me, but it depends on the investment style that you want to follow, and each style has got its own pitfalls, all right? And on the mistake, this is what History Makers is trying to teach you, is that you need to do your work, and History Makers will teach you how to do that work, how to do that research. So, and RMB holding, so it used to own stakes in a lot of companies. Actually, it's a parent company for a lot of companies that are listed in the JSE. The one bundled from there, right? So it was founded by Jan Rupert, if I'm not mistaken, and it owned FirstRand, right? So they owned FirstRand, FNB. They owned, I think Remgro owns part of it now. It's unbundled RMBH, the insurance company, which owns, I think, 30% of all big insurance, Momentum, Discovery, Liberty. They just own a whole lot of assets. But what happened with RMB, and I think you invested without making a lot of homework, is that it unbundled FirstRand stake. They gave it to shareholders, and now they're left as a property company. So what is left in RMB Holdings is it's a property company. They recently declared a dividend, so they went ex-dividend today, I think, if not yesterday. So they recently sold some assets and they paid a big dividend, I think 80 cents or so, from those properties. So I think it's from those properties, or they had anticipated. No, it's not. That's Altron. So I think I'm mixing, but they recently sold some assets and they're kind of scaling down. Basically, before you had invested, you did right. You looked at the history of the business. You saw a solid company that was paying good dividends for many years, about 20 years. It was paying good dividends, but you invested at the time that it was unbundling, and you probably didn't follow up with your research on the company. I hope I answered you and I didn't confuse you. Is that both are important, the history as well as the opportunity, the future, and more importantly, doing your homework and understanding where the company is standing is extremely important. Did I answer you?
Yes, you did, and thank you very much on that. One last question. I just want to know, how do you go about selecting a company to invest in? Okay, I understand how you analyze everything and say, okay, this is a good company to invest in, but initially, how do you go and be like, I'm going to invest at F&B now? Do you just, I don't know. I don't know if the question even makes sense, but sort of makes sense to me.
It does. It does. And for you guys who are starting to invest now, you find yourself, the JSE has got 360 companies, 360 companies. There's mining, there's banks, there's shopping, clothing retailers, your Mr. Price Truist, there's food retailers, ShopRite, Spar, Woolies. You don't know where to start, right? It just seems as if this place, this insurance companies, is just crowded. So your question is, how do I go and pinpoint this is what maybe the company that I want to research, and if I like it, then I'll invest in it. I think that's what these classes are going to take you through, right? And I'll just summarize that. I think your answer will come gradually as you attend these classes. You'll get to understand the process. I go through things that I try to highlight here. I look at the income statement. I want companies that are growing. If you're hoping to make more money in the future, you have to buy something that's growing. If it's not growing, it has to be ridiculously cheap, such that you can just walk out and sell it. You have to look at the risks in the business. It can come from management, it can come from the sector. Real estate, the malls didn't seem as a risk. They've been the safest place to invest for maybe forever. But COVID came and changed everything. Now they seem to be the worst place to be invested. It seems as if people are not going to go back to offices and malls. Anyway, you might have a different opinion, but there's just, I think you'll get answered as you attend more of these classes. Let me just summarize it in that way. Is there anyone who has got another question? It's already past 7, so we are overdue our meeting. Anyone with a question before we end the meeting? Okay, you guys ask, those of you who have got questions and are scared to ask, I know that you will make mistakes. Just write down your mistakes and the money that you lost, and that's your school fees for those lessons. You just assume you're paying somewhere business school to learn investing. So for those classes that you missed, you have to write the fees that you're paying for the class. Thank you guys for attending, and we'll meet next week. I think Chet will take you through the class, or someone from History Makers will take you through the class. I don't know, Simpiwe, if you want to say something right now at the end of the meeting, or someone. I'm done from my side.
No, I have nothing to say, but yeah, thank you so much to everyone for attending. Okay, bye.
Bye-bye, guys. Don't forget to engage. Don't forget to engage on the group, guys. So if you've got questions, just ask them on the group, and I'm sure someone from History Makers will assist you from opening the accounts and some things that have to do with investing that you see, maybe articles or something. Just send them on the group and ask your questions there. Someone will answer. Thank you guys for attending. Cheers.
Just a reminder, there's a Forex class tomorrow, same time, same platform. Cheers.
Thank you, Mungo. Cheers.